Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, we'll look at various time frames, and we'll also take a look at market cipher. So it has been a couple of weeks since my last video. I have been quite busy. Last weekend I was away for 4 days camping, and it was also an event where I DJ'd at. And this previous weekend I also DJ'd in the city. So I did spend time planning for those sets. I do have more free time now, so I should be able to put out some more regular videos. But what was mentioned in those previous videos did still apply to our price action over these last couple of weeks. The previous video was made somewhere around here. I did think this was the low of the pullback, but I didn't rule out the possibility of coming down to this 25.3k area. And last week on Twitter, I did post a diagram showing that previous resistance levels tend to turn into support levels when we do start the bull run. And I referenced the previous cycle here. This was the 2014 bear market and 2015, 16, 17 bull run, where I did show once we reached that bear market low, we broke above the key resistance area. We did come back to test it for support, acted as support. We formed a new resistance level. And on the next pullback, that was the area where we got support. And also on this pullback, the previous resistance acted as support. So I think we're doing a similar thing, flipping previous resistance into support. And I think we're probably somewhere in this area of the cycle, although we haven't gone up as much. So perhaps we are more in this area. And again, doesn't have to look exactly the same, but we have seen a nice move to the upside and currently getting a nice bounce off what was previous resistance and the area we spoke about, which was 25.3k. And we were looking at this area also because it was a confluence of fib levels, taking it from the bear market low here to our high at 31k. We do see that 382 fib level here and doing another fib retracement from this low after the pullback from 25k to 20 to that same high. We get that 0.5 fib level. And when these levels do line up like this, it can quite often indicate an area where we might pull back to and get support. And that area did also line up with the previous resistance levels. And just looking quickly on the daily here, I have drawn in this falling wedge pattern with these yellow lines. It does seem like this is the pattern we are in. This is more likely to break bullish rather than bearish. We can see we have two touches on the top, two on the bottom. I don't count this touch. We look at alternating touches. This is the next low. So we have one on the top, one on the bottom, second touch on the top, second on the bottom. Generally on the third touch on the upside, we break bullish. But sometimes we do come back down here one more time before breaking the falling wedge with that third touch. So I'm not ruling out that we come back down here. Sometimes we make a higher low and then break it. Sometimes we actually go lower and then we look for bullish divergence, and then we look to break that falling wedge pattern. And the targets would be these previous touch points up here. But let's go back to the US stock market briefly. This is the S&P 500 futures chart on the 3-week time frame. We can see over the previous 3-week candle here, we've had a nice move to the upside. And we see doing a fib retracement from the all-time high to the low here, that the golden pocket area here, we have closed above that. So that is a good sign for the stock market. We are also above the point of control on the VPVR. This is the area where the most amount of volume was traded. We saw it acted as resistance here several times, and we have closed above it and had this nice move to the upside. We are also above this higher up order block from this green candle in a downtrend. These order blocks are areas of supply and demand. It's a break in a trend. Time was spent there and therefore volume. And these areas can become of interest later on when we interact with them, acting as support or resistance levels. Basically, these order blocks are formed from a single red candle surrounded by green candles, where the green candle does close higher after that red candle. So basically the red candle is contained within the two green candles, and the same on the downtrend, a single green candle contained within the two red candles around it. So we saw how this order block acted as resistance in line with that VPVR spike. And we closed above all of those, and now we have had this nice move to the upside and even closed above this order block. The next order block higher up is quite close to the all-time high. And actually, we are only currently down 7% from the all-time high. So the stock market is looking quite good here. And that is also generally good for Bitcoin. Let's go to Bitcoin now. This is the 3-week time frame. We did just open a new 3-week candle at the start of the week. Have been watching these trend lines, this one connecting this high and this high, and it has been significant. We saw it has been acting as resistance here for three-week candles. So for 9 weeks here, we have been in this downtrend. We can see we're getting close to the apex here when we draw a line connecting the overall lows. And we see the same thing on the 2-week chart. We did also open a new 2-week candle here. Has been acting as resistance. We haven't closed any 2-week candles above this trend line. And this trend line does look different here on different time frames. Obviously, with the higher term time frames, the angle of this line can change, but it is relevant to that time frame that we're looking at. You can see it's also acted as resistance here for several weeks. And on the 2-week chart, we actually are right next to the apex here. This candle has just opened, so we have another week after this week. But I think if we do close above this trend line on this 2-week candle, we'll start to see a move to the upside. There is also a 2-week order block here from this green candle in a downtrend, and we're looking to close above that also. That is currently sitting at 27,130. But again, we still have another week after this week before this candle closes. And down to the weekly time frame now, same trend lines drawn in. We can see it still has been acting as resistance, even though we have closed some of these weekly candles above this trend line. We also have those fib levels drawn in where we did see support here. We wicked down into that level and got a nice bounce to close that weekly candle. And we're currently sitting at 26.7K. We did come down to 24.8K. And the level I've been talking about for a while is that 25.3K area, looking for it to act as support. And there's a few things we can look at on the weekly time frame here. I have drawn in that falling wedge. We can see it 2 touches on the top, 2 on the bottom, looking to break this falling wedge pattern. But again, I'm not ruling out that we come down one more time and then break it. But we can look at this 21-week exponential moving average here, and we can see it has acted as support. It did previously on this pullback. This is a key moving average to watch. It is very close to the EMA ribbon with the yellow line. This is the 20-week exponential moving average in yellow, and the other one is the 21-week EMA. But if we do look at the EMA ribbon here, we have been talking about this, that generally once we reach the bottom of the bear market and we break back above this ribbon on pullbacks, it tends to act as support, and then we get the next move higher. And we can see we did come into the ribbon. We did actually wick below it, but we didn't close below the ribbon. And to completely break this, we would have to open and close a weekly candle below it. And for even more confirmation, not even touch the ribbon with the wicks. If we were to do that, I would expect us to probably come back to 20K. But we can see the ribbon has acted as support here. We got a strong bounce and we did close above the ribbon on the previous week close. Now we are completely above it. So if we can close the week like this without touching the ribbon, looking at this candle, including the wicks, then that is very likely that we do continue to the upside and the pullback is over. But let's just look at that 21-week exponential moving average. Again, that's just the yellow line on that EMA ribbon, but it does clear up the chart a bit here. And if we do go back to previous bull runs here, we can look at this cycle. This was the 2014 bear market, 2015 consolidation at the lows. Once we started the bull run here, we can see on these pullbacks, we came back to the 21-week EMA and we did wick below it, but we didn't actually close below it. And on all these pullbacks, we came back to this moving average. Again, we hugged it here, and then we eventually had the next move to the upside. And this happened all the way up in the bull run several times. So it is quite an important moving average. And generally, it's a good time to buy Bitcoin when we do come back to that moving average. Another thing we can look at is the RSI here. We can use that in confluence with that 21-week EMA. And I've just got marked out this blue box. This is basically between a 50 reading and a 55 reading. And just showing on these pullbacks here, where we do find support on the RSI during the bull run, and the bear market, it acts as resistance. So just looking at the price data at the same time, we can see we pull back to this moving average and also this blue box at the same time, and generally acts as support on the bull run, and we continue all the way up until we reach the peak. Once we start closing below that 50 level on the RSI and also the 21-week EMA, generally we have entered the bear market. So we can see with our current price action, we pulled back to that moving average. As we mentioned, we've got support off it once. Looks like we're getting support off it a second time. And we're also pulled back to this blue box on the RSI. It did act as support once here, and now we're looking for it to act as support again. So we do see it on all these occasions where these arrows are, generally in the bull runs. We saw it in 2020 here also, coming out of the COVID crash here. We started using that 21-week EMA as support and also this blue box on the RSI. And then we did go to the top of the bull run. And even on this pullback here, where we thought the bull run may be over, it did act as support. We had one more push, made a higher high. That was the top of the bull market. And then once we got below it, acted as resistance. It confirmed the rest of the bear market. And now we are back above it again. So it is a good way to find possible areas where we may pull back to on corrections in the bull run. And so this is a good sign that we're seeing a bounce off the 21-week EMA. The other thing to note here on the RSI is if we do zoom in closely here, we did actually make hidden bullish divergence. With this low, we see lower lows on the RSI, just slightly on that close, while at the same time we made higher lows on the price action. So this was hidden bullish divergence, and another reason why the low is probably in. We did also completely cool off here on the stochastic RSI, so we have plenty of room to move back to the upside. Order block wise, there's not really any order blocks in this area until we get back to 28,000. We can also look at the 200-week moving average here in red, and we can see we did close below it on a couple of candles here, and I'm sure a lot of people may have thought this is going to trigger a bigger move to the downside. But again, we did get support of that 21-week EMA, and with that hidden bullish divergence, I do think the bottom's in. And this 200-week moving average hasn't been as significant this cycle. We spent a lot of time below it, whereas on previous bull runs, it did pick the bottom of the bear market pretty much. But I think this was a good way to trap people to close below the 200-week moving average. Perhaps people capitulate, and then we see the bounce, and the smart money buys up these lows. And going down to the daily time frame now, we've got all those same lines drawn in. We also have that falling wedge pattern drawn in here. You can see it with the two touches on the top, two on the bottom. We're looking to try and break the falling wedge pattern to the upside. And again, I'm not ruling out a possible pullback back down here before breaking it. We're just looking at some order blocks now. We can see we did form an order block here, and we did spend time inside it. We closed above it, came back, tested it for support, and now it looks like we're going to close back above it. So this looks like it's acted as support. The next area where we do have several order blocks is pretty much where we wicked up to in today's price action at about 27K. The more wider the color here means that order blocks are overlapped. So there is actually 3 order blocks here. This one coming from this green candle in a downtrend, the bigger one here from this red candle in an uptrend, and the very large one from this red candle in an uptrend. So this is a key area here at 27,070 to 27,130. So we might get some resistance in this area. And this is also the top of the falling wedge pattern here. So we may get resistance. Maybe we come back down one more time and then break it. We'll have to see how that plays out. We are quite close to the top of this. The other thing we can look at is the EMA ribbon on the daily time frame here. We can see it did act as resistance here on this attempt to break it. Now we are trying to close above it again here. The top of this ribbon is at 26,850. So we'll have to see if we can close above that EMA ribbon. Not placing as much significance on this ribbon. When price action starts going sideways like this and the ribbon squeezes, it does become a little bit less significant. It is more useful in trending markets, but that weekly EMA ribbon is very significant, and closing back above it is generally a sign that we're going to move back to the upside. We can also look at the volume profile here. We do see the point of control. The most amount of volume has been traded at 26,880, and this is where we're currently getting some resistance. That's also the top of the EMA ribbon. So this is a key level for us to try to get above here, between around 26.8 and 27.2. And we can also pull up the RSI on the daily. And we do have this big pattern here, this triangle pattern going all the way back to June of 22. We have had several touches on this line. We were thinking maybe we have to come back to touch the bottom of this trend line. So far, we have just spent time in the middle here, with also getting resistance from these touch points. So if we are able to break above this trend line on the RSI, it would indicate also that we're going to start moving back to the upside, and would most likely coincide with breaking this falling wedge pattern. The other thing I want to look at here is the Ichimoku cloud on the 2-day time frame. And what I've noticed here on the right is our current price action. This was the 2022 bear market. We can see we got back above the Ichimoku cloud here, again on the 2-day time frame. And if we just zoom in, we can see on these pullbacks, the first pullback from 25k to 20k, we touched that cloud, got a strong bounce and moved back to the upside. And currently we can see we've come into this cloud again, looking for it to act as support. We wicked to the bottom of it, got a nice bounce here. And the interesting thing about this, if we go back to the previous cycles here, this is the 2014 bear market, and we can see we reached the bear market low. We eventually broke above the Ichimoku cloud here, and on this pullback we came to the bottom of it, acted as support. We wicked into it several times here, but we can see this cloud basically acted as support, and we moved higher. And then we had another correction into the cloud. We did go slightly below it here, but pretty much acted as support, and we moved higher again. And on the next pullback here, again the same thing, wick to the bottom of the cloud, acted as support, and we see that again and again in this bull run as we do eventually come to the peak. So it is a quite significant indicator here on the 2-day time frame. During the whole bull run in 2016, 2017, it acted as support on the pullbacks, and we have seen that currently with our current run off those 15k lows, acting as support here and now here. So I do think this will act as support, and eventually we'll have another move to the upside. So there are a lot of things telling me that the bottom is in, and that's why we were looking at that 25.3k level as the lowest we will probably go on this pullback. Again, we went slightly below it, but the candle body closes were pretty much at 25.3k. And again, we have that previous resistance being flipped into support, just like with our current pullback. We have the support of the 2-day Ichimoku cloud. We also have that confluence of the fibs with the 0.5 fib and the 382 fib, and the support of the 21-week exponential moving average and the hidden bullish divergence on the weekly RSI, and also coming back to this blue box on a pullback on the RSI. So lots of signs telling me that this is the bottom around this area, and we are going to see the next move to the upside. And over to a market cipher now. This is the daily time frame. We can see we did have a green dot here on Friday. It did get confirmed. We are seeing this move to the upside. The 2-day time frame also had a green dot on Friday. It got confirmed on Sunday. So we're starting to see these green dots build up now. The previous 2-day green dot here only had this small move, and then we did go back down. So it wasn't a completely good signal with the 2-day green dot here. But I should note back on the daily here that these green dots that appear below this white line are more significant. You can see it makes this other green dot down the bottom here. We didn't have that on these previous ones. If we look at that pullback from 25 to 20k, this green dot down the bottom below the white line was the one that was the bottom of the pullback. This previous one, even though we made a higher high, eventually we did come back down to make a lower low. So these are more significant. And the 3-day time frame also has a green dot, though it won't be confirmed until Wednesday. We also saw a false signal with this green dot here. And the 4-day time frame also has a green dot. That one won't be confirmed till Thursday. But we can see they are building up on the 1-day, 2-day, 3-day, and 4-day. This one was a false signal here, even though we did move to the upside a little bit. But we can see this green dot is much higher up. Generally, the lower down, the more reliable. And if we just look back at that previous cycle we were comparing things to, the 2014 bear market here, bear market low, and then we came out of that bear market. We can see on this initial pullback here that the 4-day green dot did confirm that the bottom was in, and then eventually we started to move back to the upside. Also on this pullback, the 4-day green dot confirmed the bottom was in, eventually moved back to the upside. So the 4-day is quite significant. Again, the more lower down, the more reliable here. I do think we're possibly in this area in the cycle, or even this area. We could see some prolonged sideways action still for a while before we see that next move to the upside, but I do think the low is in. And again, the more higher term time frame, the green dot, the more significant. So we do have that 4-day green dot. Again, we have to wait for Thursday for it to be confirmed. But in the previous cycle, it was significant enough to confirm that the bottom was in, and eventually we would start moving back to the upside. The 5-day time frame doesn't have a green dot yet. The next candle is on tomorrow's open, and we haven't seen any false signals on the 5-day time frame with this pullback. So perhaps this is the green dot we need to look for. But again, we are seeing them build up the 1, 2, 3, and 4-day time frame now. We want to see them build up all the way to the weekly. However, once we get that weekly green dot, the move to the upside could have already started and it could have missed the low, and it can be a bit of a late entry. The 6-day also doesn't have a green dot. The next candle won't be till Saturday. And the weekly time frame also doesn't have a green dot yet, but we do see this blue wave starting to curve back around. But again, I think that 4 or 5-day green dot is enough confirmation to confirm the bottom is in on this correction. But I think that's about all for today. I hope you enjoyed that analysis. In the short term, we can watch the daily time frame. Again, we need to get above the point of control on the VPVR, above 26.9. On tomorrow's candle, the top of the falling wedge would be at 27.2. And to get above the daily EMA ribbon, we would need to close the day above 26,850. So that's something to watch in the short term. And again, I'm not ruling out that we come back down one more time here. Perhaps we make a higher low and then break the falling wedge, or perhaps we come down slightly lower, put in some bullish divergence, and then we break it. But I do think this is pretty much the low here, and I do think we break bullish out of this falling wedge pattern. We see positive signs in the stock market as well. But I think that's about all. Thanks for watching this video. I'm Bitcoin Mamo. I'll see you next time. Bye.